Hey guys, welcome back to another video. Today I'm here again talking about a stock that I really enjoy. I think that this company is the best buy in the stock market right now. I wholeheartedly believe that. I put my money where my mouth is. I bought a lot of stock in my own portfolio. I think this one is truly easy money. So if you guys do enjoy this video, be sure to smash that like button. Also subscribe to the channel. I really appreciate the support. Thank you guys so much. Let's get right into it. Yes, it's still SoFi. The stock that I like the most in the stock market is still SoFi. I recently made a video breaking this down, but there has been some new things added to SoFi's, regimen, what they do, a little bit of some differences. And even if, you watched the last video, this one's going to add a lot more. It's not guaranteed, but almost. Who goes to banks? Boomers, people that are older, people between 50, 70, somewhere around that age. That's who usually goes into the bank to cash their direct deposit that they got from their job. Which banks? They usually don't go to SoFi. That's not really a popular bank among a lot of older people. It's more towards the younger generation. So if we see, Wells Fargo is a very popular bank among the older generation. These people that are walking into branches, depositing their check, talking with the teller. Chase Bank, Bank of America. If you go into any of these banks, you all see that there's a crazy line every single time you go in. I personally go to Wells Fargo, which is ironic, but I do go to Wells Fargo, and every time there's just a crazy line because there's, two people working there. What do all these banks have in common? Location. Great song right there if you guys did listen to that back in the day. But location. Wells Fargo closed 49 branches in 2025 as of late March. In March, they closed 49 branches. It's not even 3 months into the year. They closed 49 branches this year. And then with other reports indicating over 20 closures in the first part of the year and plans for 30 plus additional shutdowns by year end. Total closures, 19 Bank of America branches are slated for closure in 2025. And you guessed it, 23 U.S. branches, according to the Office of Comptroller of the Currency. Reports that July 2025 also indicated that additional closures were planned for the remainder of the year. So Chase Bank is closing 23 branches. Bank of America is closing 19, and Wells Fargo is closing 49. And that's just what's happened so far this year. There's still more time in the year for them to close more banks. That's not good. That can't mean anything good, right? Major problem right there. So that's pretty bad. These banks are, slowing in growth. They're very established, don't get me wrong. We're going to go, look at their net worth here, but a lot of these banks are very expensive. They trade at a low valuation, but that's because they're not going to do anything crazy. They don't have any major growth, in their future. And that makes sense. They're pretty linear. Their business model is to have money on hand. They make money from the interest. They're able to, loan money. People pay it back. It's pretty, straightforward business model, as most banks are. It's a safe investment. You're not going to get crazy returns. You're not going to lose a lot of money. You're probably going to make around what the rate is, maybe a little bit more. So this is a major problem for, Wells Fargo, Bank of America, and Chase, and they would lose all their customers if they closed every single location because a lot of their customers don't use the internet like younger people do. So they need to keep these locations. If they don't keep, in my hometown, I have, it's not even a big town, and I have 2 Wells Fargo locations, maybe 3. There's 2 Chase Bank locations. It's not a huge town. We'd be fine with 1 location. But then you go into them and there's 2 people working at these locations because these banks are, I think they don't want to show it, but they're scared. These banks are scared to close these locations down. They know that they can't. And they don't want to, pay these salaries of the people that are working in banks, which is over $50,000. You have, 3 banks in town. You got 2 people, probably 3 or 4 working at them all day. That's 50,000. That's 200,000 per bank just on salaries. That's not even the lease. There's a lot of bad things that are going on with these banks. There's a lot of problems with these banks. What else is there? We see all of these market caps are huge. These are huge companies. Very, they're not going to go under. They're very established companies. I'm not saying that these companies are going to close all their branches and they're going to shut down. I'm saying that they're going to have some problems in the future. They already are. We're seeing the beginning of these problems as banking has shifted to fully online. So 270 billion, 380 billion, and then 830 billion. That's the big kahuna, JP Morgan. But Bank of America and Wells Fargo both also very expensive stocks. Not expensive in regard to their valuation, but they are just very big companies. SoFi, Technologies is only a $34 billion market cap. I have a picture of young Kathy Wood here. I'm comparing the two because they're both, very similar actually in a lot of aspects. So young Kathy Wood, not as much money as she has now, very rich. ARK fund, if you guys know about that, actually doesn't perform the best as of recently, but all time it's been good. I'm not saying to buy that, but I think that they're both young. They grew a lot in net worth over time in a very short period of time, very driven, especially SoFi. And then SoFi was actually losing money at the beginning of where their stock was. So she also went bankrupt. These are two very similar things, and in the long term, she won. She made a lot of money. This is Market Dash right here, marketdash.io. I have a link down below if you guys want to try them for 7 days for free. And then if you like it, there's no obligation to you. You guys can try it for 7 days, see how you like it. It's my favorite program right now. I'm using it a lot for a lot of these metrics. It also has very good technical analysis if you guys are into that. But what I used it for today is the revenue charts. So I'm comparing right here sadly, the top, not sadly, but numbers wise, Wells Fargo is $81 billion in revenue. But they haven't grown in the past, 5 years. They might be up, a teeny bit, like $2 billion in revenue, which is, I don't even know how, that's not even, 3% is what they're up in revenue. Not very impressive. Revenue for SoFi is up from 650 million all the way to 3 billion. So they've almost, 5x the revenue, give or take. So they're pretty much, 100% gaining on their revenue. They're 100% times their revenue. They're doubling it every single year as of right now. And I don't see this slowing down anytime soon. I think SoFi's business model is made for this. It's doing what it's supposed to do. And the revenue for SoFi, I'm comparing these two because obviously they're different, companies in different spots at different times. Wells Fargo has been around since, the beginning of time, and SoFi has been around it's been publicly traded for, barely 5 years almost, not even. So for those two to be compared is kind of crazy. But you see the growth in this, the early growth in this, and if it stays constant, like how it looks, that graph is pretty, linear on the way up. I think they're going to catch up. I think one day, SoFi is going to be as big as these other banks. There's no reason that it's not going to be. So my thesis is basically that SoFi has very little overhead. It doesn't have any locations, if you guys didn't pick that up. SoFi has 0 locations. They have some headquarters, some international headquarters overseas, but they do have 0 locations, 0 branches where you can go in and cash your check. You can do it actually online, which is very convenient. That's what I do. And that's all that they have. And a lot of their customer base is younger people that don't want to go into the bank. That is who they're trying to attract because their net worths grow the most as well, younger people. The main driver of net worth growth is time. So younger people, essentially have more time than older people. They're getting new careers. They're, accumulating wealth throughout their life, and time is multiplying their income with interest, stock market gains, anything like that. They're already in the conversation with big banks. They're already disrupting the space. This is why these big banks have to close down. This is why SoFi is thriving. Their growth rates are insane because they have they don't have 0 overhead. They still have employees. They have to, run a company here, but they don't have to pay, 4 employees per location, which is $200,000 additionally in, 3 small locations in a teeny town in Idaho. They don't have to do that. So if I can just pay the people that matter, and they can pay the people that are actually bringing them more return than their salary. Their ceiling is much higher. Wells Fargo's growth rates are not going to skyrocket in the next 2 years. Newsflash. JP Morgan, they're not going to grow immensely over the next 3 years. They're going to grow probably a little bit just because, if the economy is growing, banks are growing, but they're not going to skyrocket. They're not going to go out there and, wow the world. They're probably going to grow at a constant low rate, which is if you're investing in these big bank companies, that. And while others are losing, this is my main point, is that while these banks are, they're slimming down, honestly, they're, kind of getting rid of some locations, SoFi is growing. SoFi is growing in size, it's growing in popularity, it's growing in members, it's growing in revenue. It's not growing in any category besides debt. It doesn't have any debt anymore. SoFi just recently turned profitable over the past year or so. SoFi has turned profitable a little bit over a year now, actually, and that was a major driver for growth in their stock price. That's why it's been, up so much from where it was just $6. And $6 for a stock that is not making any money is kind of a lot as well, but that's because SoFi had this amazing idea. So I wanted to take a look at SoFi's earnings slides to conclude this video and show you guys where these numbers are actually coming from. So SoFi's earnings slides, let's check it out right here. We see their investor presentation. This is for Q2 of 2025. This is their app. This is what it looks like. Very clean interface, very simple, very easy to use. Love to see it. Members and products, their compounding annual growth rate for members is, yes, 51%, which is insane. No other bank has that at all. It's pretty crazy to see that in a bank, honestly. Products in the thousands, 53% as well. Durable growth, we see that this company does have durable growth, sustainable growth that isn't going to plummet over the next, few years. They have sustainable growth rates, which are 44%, 26%, 35%. It's crazy, honestly. I mean, I'm not sure, how they do it, but it is, they're doing something right. SoFi is a great company that's bringing in money now. We see in 2024, first year they actually had a net income of above zero. They had 9% margins. Now they have 11%. Their margins are growing at a good rate. And then you see that their net revenue is growing at an amazing rate. That's a recipe for success right there if I've ever seen one. They also have diversified revenue. So their adjusted net revenue, like we just saw right there, it's 74%. I mean, geez. And then we see their fee-based revenue is also up 72%, because why not? Just throw that on there. And then their fee-based revenue mix, they're actually upping their fee-based revenue a lot in comparison to all their other adjusted net revenue, which is great to see for a bank, because these are things that are pretty constant. Their fee revenue is probably not going to drop a lot anytime soon. Not everyone is going to pay off their fees at once. This is usually something that lasts for years to come, and more fees are accumulated during that time. Long-term approach, we see SoFi's thinking for the long term, which is hard to do when you have growth rates like this right now. But I mean, it's very, very impressive that they're going to think that they can keep that up for the long term. That would be my goal as well, and I think that is very possible for this company. So a lot of other metrics here we see, not very worried about these. These are a little bit more, nitty gritty, like what kind of loans they're giving out, which is important, but then again, not that worried about it. Also, loans, obviously, for some things are a lot lower than they've ever been. Personal loans are getting higher, but then we see that home loans are lowering because of the housing market. But if the economy is going good, rates drop and people start getting more home loans, SoFi is going to be making a lot of money on that interest. There's just a lot of things that could go SoFi's way, that have been going SoFi's way, that probably will continue to do so. We also see funding and net interest margin. I mean, just amazing, just growing as well. Capital ratios, another great thing that this company is doing. Their guidance is also up a lot. It's up 3% of the high, what they thought they were going to get. It's up 7% from the low. So if you can, raise your guidance by 7%, or 6%, my fault. If you can raise your guidance by 6% over a year of what it actually was before, that's insanely impressive. Same thing with all these other ones. They're all raised. Obviously, they're doing better than they thought they were going to do. When are they not? And then here are their financials, which you guys can go over if they want, but I kind of went over, the general thesis and idea in the video here, and their financials are what kind of they showed metrics for. SoFi, also very great company for showing metrics. I mean, wow. I mean, this investor presentation, they got someone, over there that's doing a very good job with that, and they have an investor presentation every quarter, which a lot of companies don't. I'm very impressed with SoFi's, investing team and their investor relations. Very happy with that. And you want to invest in a company that's going to have investor relations like that. I mean, why not? They're going to actually care about their investors, and they want you to make money as much as they want to make money. So I feel very good about that, very confident. So that's all I have for today's video, guys. If you did enjoy it, be sure to smash that like button. Also subscribe to the channel. I really appreciate the support. I know this is a lot of videos about SoFi. I think I've made 2 in the past week, but for everyone that didn't see the other one, this one's very important. And even if you saw the other one, I hope you learned a thing or two that was new today, or it was a wake-up call that, okay, I should get into SoFi now before it's too late. So thank you guys again for watching. Subscribe and like to the channel. I'll catch you guys in the next video tomorrow. Peace.